Pazoo crashes. James Farinella gets out at the last minute. Knowing when to sell your position is a huge asset to an investor. Nobody wants to get lumped with a worthless investment. This is exactly what James Farinella from investment firm Integrated Capital Partners did when he took full advantage of the excitement around Pazoo. What do the stock trends tell us? The world of finance is a rapidly changing environment that evolves as new trends occur. In order to understand quite how much this changes, you only need to look at the stock markets of today compared to what they were like 10, 20, or 30 years ago. The latest trend to take place involves the legalization of cannabis in many states for medicinal purposes. In the United States, some of 300 different companies are now listed as tradable shares, although most are not really worth anything. Pazoo as a good investment? Pazoo seemed like a pretty good investment. They announced a new, well-fitted laboratory to bring forth excellent products for those who need them to the shelves of their stores. They ran lots of promotional campaigns, and the managers were adamant that they were one of the best companies in the industry. Pazoo started off in a similar market before making the move to cannabis. They were providing healthcare products for animals when the owners decided that the sudden change in legalization meant it might be extremely profitable to get involved in this market. How Pazoo raised their equity? In order to finance the move, they needed to raise equity, and they did this through the issuing of shares. Pazoo borrowed an aggregate of $780,000 with certain conditions, interest rates from 8% to 12%, conversion rates $0.0065 to $0.02, and maturity dates November 2015 to April 2020. Investors did look closely at what the company was doing, and the facts that were reported to the authorities are freely available online for everyone to see. Some people had long-term goals with the company, but some could see the cracks were starting to form. James Farinella had big plans for investing. According to his Facebook page, James Farinella had big plans for Pazoo and initially invested very heavily into the company. He was adamant that the change in regulations meant that this was about to be a really big company in a rapidly growing market. Pazoo's low quarterly earnings scared investors. By this time, however, the new lab had yet to become functional, and after Pazoo reported quarterly earnings of just $1,399, James and some other investors were spooked. James sold his shares and managed to make a tidy profit before the price plummeted. He got out in time because he is an experienced investor, and he knew when to buy and when to sell. Some people have put forward cases about some of the things that went on behind the scenes at Pazoo, but it is pure speculation at this moment. It seems likely that the company was poorly run and made some mistakes that cost investors their money.